Today is Monday, 5/3, and this is the ADMIS weekly kickoff video. Today we have Steve Freed, ADMIS Vice President of Grain Research, and Alan Bush, ADMIS's Senior Financial Economist. Steve, let's start with the grains. Soybeans have broken recently from 1574 all the way down to 1490, and then rallied today to test 1563, I think is the area. Corn dropped from 684 down to 629. Then that's also rallied up into the 698 area. And wheat again down from 769 to 711, and then rallied today to 753. Obviously, a lot of volatile price action. Tell us what you think about that.
I think initially the break was because our prices on the export side was too high versus competitors, and we were getting some good weather here in the Midwest. I think that last week we started from the bottom rallying because, first of all, China has said they're going to take the old crop corn that's on the books, and the USDA has about 160 million bushels that's not in their export number that they thought the Chinese were going to roll forward. So I think that's why, cash basis levels in corn, ethanol guys are paying as much as 80 over the July to try to get corn bought. And so those factors help corn. On the bean side of things, again, we have not seen the bean export numbers to hold prices near that 1570 area, so we broke. And then we found out that there's going to be a big increase in soybean oil demand next year as they use it for jet fuel. We just don't have enough beans to do that. So we rallied the basis and we rallied futures on that increased demand. If we plug in the crush we need, we probably would see even a carryout of only 25 million bushels next year. And then finally, I think that the market is concerned about Brazil weather and also logistics domestically and moving things around. So I think the market will continue to be volatile. Case today, we're breaking from the highs, we're lower on the day, but I think at the end of the day, the path of least resistance is higher.
Demand-driven market's always a good thing. Steve, you mentioned the weather. Let's talk a little bit about the U.S. weather, and then if you'd follow up, I know you mentioned Brazil, but world weather in general.
I think it's interesting over the next couple of weeks, we're going to see cool and normal rainfall across most of the Midwest, the driest areas of the Dakotas and southern Canada. And then some people are trying to bring a ridge into the western Corn Belt after this rain event. Our guy is watching pretty closely the Pacific water temperatures. The warmer they are, the better chance we have normal weather this year. If they turn cold, then we'll have this ridginess, especially in the western Corn Belt and the Dakotas. So this is a critical time for weather. Europe's weather is better, the Black Sea weather is better, Brazil is dry, and Argentina weather is okay. So in general, the focus right now will be on this ridginess that could develop in 2 weeks in the U.S.
Finally, Steve, one more question. On May 12th, we have a supply demand report coming out. Do you have any estimates on that? And what do you think we're going to see on that report?
The last two reports, the U.S. basically did nothing, and the reaction was a little negative. They could do nothing again for the 2021 S&Ds. They want maybe to see China actually take this corn, and they really don't want to bring the carryout in beans below 120. They think that is minimum pipeline. But they will be giving us new S&Ds for U.S. for 21-22. So the average guess for the corn carryout this year is a billion bushels, but I doubt if they drop it. The average guess for the bean carryout is 100. But if we plug in big crops next year, big demand, the carryout in corn doesn't change. I doubt if they say 1.1 billion, but that's the number. And for beans, I know they won't say this, but everyone's carrying a 25 carryout in beans for 21-22. So this market isn't over by any means in the next 6 or 7 weeks. It's a 2-year problem for demand and supply.
Thank you, Steve. Let's flip over to the financials for a moment here. Alan, Jerome Powell, Federal Reserve Chairman Jerome Powell, he's going to speak at a virtual conference this afternoon. What's the expectation from that speech?
Okay, well, first of all, he will be giving a speech at 1:20 Central Time. Most likely, the Fed chairman will say the recent increase in inflation is largely reflecting transitory factors and that the Fed will hold interest rates steady until the labor market is back to full strength and inflation has reached the central bank's target of averaging 2%. Overall, I expect the Fed to remain accommodative, probably for a longer period of time than many analysts are currently anticipating.
There's an old adage, Alan, sell in May, go away. Why don't you explain that to our readers and what that means?
Okay, well, the adage sell in May and go away is a traditional thought process that seasonally stock index futures or stocks would tend to work lower in May. And if traders were patient and sold some of their positions at the beginning of May, that they could buy them back cheaper at the end of the month. So that's what traditionally analysts have been looking at. My feeling is that will not work this year. The fundamentals still remain very supportive to the stock index futures, including the global economic recovery, stronger than expected first quarter earnings, and global central bank accommodation. So the short answer is no, I don't think sell in May will go away, but you might be hearing that from time to time this month. Also, with more than 60% of the companies in the S&P reporting earnings, the results have been very spectacular, to say the least, with earnings rising 46% in the first quarter. That compares to forecasts of 24% growth at the beginning of April. So no, sell in May and go away will not work this year. Prices
Thanks,
are
Alan. And just one more question. If you could just brief us quickly on the gold and silver markets.
Okay, silver has broken above downtrend lines. That took place in April. Central banks, if I'm right that they will remain accommodative for longer, that is a bullish longer-term factor. So the trend on gold and silver is still higher. We're seeing sharply higher prices today. So I think there's a lot left to the upside in the precious metals.
Thank you very much. Remember, the thoughts and opinions heard by our analysts today are the opinions of themselves and not necessarily the opinions of ADM Investor Services, Archer Financial Services, or ADM. Thank you very much.